And everything goes back to the very beginning. When the first legends built a united republic to enable supreme power to the people, join Fiat Republic on a thrilling adventure. This is a Crypto Legends podcast.
All right. How exciting it is to see compliance and regulation being mentioned so many times, and it wasn't even compliance panel, huh? I'm sure you guys say that compliance is boring, but I'm not sure, huh? A lot of mentioning, everyone thinking about it. Yeah. So, well, I just want to start saying that we all know that compliance basically is key, right? For us to have sustainable business, not only on on financial, traditional finance, but especially on crypto as well, right? So I think that compliance is basically the secret ingredient to make sure, woo, I like it, enthusiasm, to make sure that the traditional financial players give crypto platforms access, right, to rails, and also to prove to regulators that Web3 is mature enough and is here to stay. So I would say that building compliance-first approach is absolutely necessary, and it's also very important for us to be able to thrive and survive in the Web3 world. So that's the reason why we brought 4 experienced compliance professionals, and we're very happy to have you guys here. So please, if you can introduce yourselves and tell us a bit more about your experience, starting with you, Amanda.
Hi, my name is Amanda Shoffel. I'm a lawyer by background. I practice primarily in the U.S. for regulators like New York Attorney General, and then went into white-collar criminal defense and securities litigation. Didn't love representing money launderers after having worked at law enforcement so long, or alleged money launderers, and decided to have a career change, went into compliance, moved to London about 5 years ago, and have worked in various compliance in-house roles since then. First at Sterling Bank, and then at Kraken Digital Asset Exchange as their MLRO. Have been at Bitstamp as their Chief Compliance Officer in the UK for about a year now.
Thank you. Anamaria?
Oh, my turn. So my name is Anamaria Fuiorea. I am the head of global compliance for YieldUp. And, well, as everybody on the panel can say, not the most loved person in the room, but
No.
I make an effort to basically try to support as much as I can the strategical direction of the company with respect to everything to do with keeping the company and our customers safe.
Thank you. Stephen?
Hey, I'm Stephen Eisenhauer. I am the Chief Risk and Compliance Officer at Ramp. If you don't know who we are, you're in our office. So,
Welcome.
my background spans traditional big banks, money remitters throughout Latin America and the United States. There's a lot of U.S. accents or American accents up here today. And the last half or so of my career has been focused on EMIs and fintechs in the UK and Europe, and now I am part of a crypto firm.
Thank you. Sarah?
I am Sarah Tomalewicz. I am a director with Ashurst Risk Advisory, pretty much a career consultant who specialized in financial crime and fraud investigations. Just joined Ashurst in January of this year. It's a fairly new firm. It's a risk advisory practice that's kind of been built within the law firm. So many of you might be familiar with Ashurst, the law firm. So basically our model is to offer sort of like the risk advisory services in collaboration with our legal colleagues so that you get sort of like the sort of well-rounded legal and compliance operational type model consulting. I have about 15 years of experience working with financial services firms, mainly across the areas of AML, compliance, and fraud, helping them build AML frameworks, operational frameworks, developing and helping them remediate systems and controls. Basically, at the moment, my current focus has been on helping crypto firms. So I've been helping lots of firms with their registrations and helping them with various remediation actions related to AML and financial crime.
Only fun stuff. Thank you for that. And I actually would like to start with you, actually. Is it okay? Okay. To basically start the discussion, I would like to get from you, on the notion of compliance fitness. So Web3 is generally perceived as the point of innovation, right? However, the financial market constantly articulates that crypto companies are behind in terms of tech capability and resources when compared to traditional finance and fintechs. So in the end, compliance fitness in the Web3 has the connotation of always catching up. So more optimistic people would say that compliance fitness is about staying ahead and innovating, right? So to start, I would like to ask you, where are crypto providers most behind, and why do you think they are behind, if so?
I think when you get into the fintech world, and I've not only just worked with lots of crypto providers, but lots of fintechs as well, I think they're very technology driven and very innovation driven. And I think sometimes compliance is a bit of an afterthought. I don't know how many other compliance professionals here might feel that way, but I feel like we've learned that it needs to be at the core to the way that a firm operates, and it can't really be an afterthought. It needs to be embedded into an organization with a strong purpose, underpinned with a sense of care and concern to protect the customer, protect society. So basically, I think what we've learned is many newly established firms tend to under-resource their compliance programs. They're often playing catch-up to fix the compliance issues. They struggle to get the right level of knowledge into the door, struggle for adequate resourcing across the three lines of defense. So even just building that model and having enough resources to sort of carry out all of the components of your AML framework and having your first line, your second line, and your third line to sort of do your health checks and your ongoing monitoring. One of the key things that we've noticed as well is just the lack of an effective governance and oversight structure. That's very important. Having compliance at the core of senior leadership and at the board level. And so basically, I think having the limited compliance resources poses an issue. But I think as the crypto industry starts to grow, we're seeing it start to catch up. And I think one of the other things that we've seen with a lot of these types of businesses is, they prepare at a smaller scale. And when you think about the crypto industry, I mean, it's rapid. I think 2 years in the crypto industry is like 20 years in the regular, traditional financial services industry. So I think as you're building these frameworks, you also need to be thinking about how to scale. So, we worked with, probably shouldn't say too much about this, but when you work with digital, some fintechs who, they're starting out and they're building things, and then they're like, oh, crap, we're live. We've got customers now. So I think that's something really important to recognize when you're building your framework.
And looking at it in a more positive way, let's say, what are the advantages or maybe opportunities that crypto platforms have when compared to traditional finance?
Ability to sort of rethink compliance from the ground up. So they're not hindered by some of the things that some of the traditional financial institutions are hindered by. At the moment, the ability to build strong relationships with the regulators. So they're a newly regulated industry. They have very innovative technology that the regulator might not understand. They might not understand, they need to comply with the laws, but they might not understand that they might want to comply slightly differently with the regulation because of this new innovative technology that they have that's actually probably beneficial to compliance. But I think it just scares people because they don't know enough about it. So they've got that sort of brilliant, if some people are critical of this as well, I suppose, but if they're able to engage with the regulators and get that dialogue going and educate, then I think that's a brilliant sort of position that they're in. And then also, just the fact that when you think about blockchain technology and the ability to quickly investigate illicit activities, which is not necessarily that prominent in the traditional.
All about data and transparency, basically. Yeah. Thank you so much for that. Continuing the same topic, maybe we can move to Stephen, if that's okay. So, continuing the concept of compliance fitness as innovative, as we would say, in your experience, what does an innovative compliance strategy looks like?
Oh, I mean, when we're talking about fintechs and, I guess I think many of the same issues that crypto is facing, we can probably expand to fintech as well. And obviously, it's not really, we're not all a monolith here. There's a lot of variation. Some of us are, I think some compliance programs are quite mature. But when we're, as a more general point, if you want innovative compliance and you want to have efficiency, which is a big, important piece of any startup or scale-up's success, you need to embed compliance early on. You're going to see just a massive waste of time, of resources, if you come to compliance with a finished product and go, hey, do you approve? Right? It's not going to happen. We can't.
Sure, everyone has been through this.
If you're putting us into a position where we're trying to, we're all on the same side. We want to see the business grow. But we're putting us into a position where we have a binary choice, approve or reject, and we will find a hole that doesn't allow us to approve. It just is how it is. If you bring us into the ideation phase, we can come up with new ideas, novel approaches to stuff. There's plenty to be done in a innovative compliance strategy, but it has to be embedded. So I would almost avoid talking about a compliance strategy as a separate strategy. It is just the company strategy. It needs to be there day one. That's pretty much what I want to say.
Yeah, I agree. And how do you see compliance overall in the overall strategy, and not only in the product building or anything? How do you see in the overall strategy of the company?
So we need a voice at the table. Talking about some of these. Kind of going back to Sarah's question, point about the increased data availability. If we see what is available in a new product or initiative, plan, whatever it is related to that, from day one, we're going to come up with ideas too. We want to see reduced customer friction, right? How can we do that? Well, combining the power of an open blockchain with the amount of data that you can gather from that with a KYC or other data that we have is actually very powerful and something that traditional financial institutions do not have, right? They only can see a transaction or a flow up to their doors. At that point, it ends. So when we see that, we can think of different ways to provide, I guess, this is just an example, right? I mean, there's obviously many areas of compliance, but when we're talking KYC, we often will come up with, unique and customized rules, bespoke experiences for customers that are risk-based, so that we reduce friction for those who we can reduce it for. But we, of course, have to, apply enhanced due diligence on those that provide higher risk to the company. But those can only those efficiencies and those improvements can only be gained by bringing us on day one to discussion. So it's having a senior compliance person within the company and having them within every discussion early on, and trying to remember we're not here to say no. We really aren't. We really are here to help build the business.
We are part of the team, so that's what needs. Anyone else would like to add on this?
I actually wanted to add technology. We have the amazing benefit of technology on our side and the openness and transparency of the blockchain, which are essential roles in everything to do compliance. And exactly what you just said, enabling creation of risk rules, enabling a closer monitoring policy, enabling things that are essentially not possible within traditional finance.
Absolutely. Yeah. Thank you for that. Well, moving on to anti-money laundering. And Amanda, if I may ask you this question. So cryptocurrency is also cited as criminal tool for all sorts of criminal activities. Yet many miss the fact that, for instance, Bitcoin is a pseudonymous and not anonymous, right? So first, to what extent are the issues unique to cryptocurrency?
I think the macro issues are very similar and have not changed. The big questions that we're all asking are the same. What risks do we have to money laundering? Are we comfortable with those risks? What controls do we have? How are we going to mitigate them? I think once you dig down into it a bit deeper, there are some differences, particularly when we get to the layering aspect of money laundering. So, in TradFi, in order to layer funds, somebody would have had to go to a bank. They would have had to open a bank account. They would have had to give in very standard KYC or documents in order to open that account, or had an associate who did the exact same thing and then they accessed the account. And then they're able to launder the funds by moving money in and out very quickly to obfuscate the trail, if you will. In crypto, you can open hundreds, if not thousands, of wallets with little to no KYC and layer funds very quickly. Now, in both scenarios, eventually you're going to have to withdraw or move funds off, and you're probably going to face some KYC at that point. But that is one of the aspects that has changed, the ability to rapidly move funds to wallets that are hard to connect to an individual. So to the extent we might disagree about what KYC is necessary, I don't think there's any debate about the fact that some KYC is an effective mitigant against the pseudonymous nature of wallets. Being able to put an identity verified to a wallet is effective. So that's one of the unique challenges, but one of the unique mitigants that we have is also blockchain analytics, which we never had in TradFi, which we are able to take full advantage of. So blockchain surveillance, blockchain analytics, we're able to trace transactions in a way we never were before, both historically and in real time. And that's such a powerful tool for us to be able to identify indirect exposure and be able to identify within our risk tolerance, if we want to keep that client or that user, or if that's something we need to report.
Thank you for that. So basically, if I understood correctly, you're basically saying that data is the key and we can leverage on data that we have that maybe traditional finance do not have at the same amount. Anyone else would like to add on this?
I mean, I think the whole the focus that we see out there nowadays of the continued narrative of crypto is this money launderer's magic toolbox. It's not, right? I mean, yes, any new technology provides new options and opportunities to launder funds, as we just discussed. But at the same time, the technology can also provide new ways to detect, to track, to prevent. So when we talk about we see so many numbers nowadays of this percentage of crypto is related to illicit funds. Well, okay, but the fact that we know that percentage is because of clustering technology, blockchain analytics, all these tools that if anyone can give me a real number of how much illicit funds are flowing through the traditional system, they're a liar. There's no one knows. It's simply we don't know. So I just think it's the narrative. I don't know how to change it, but it needs to change.
Absolutely. Yeah, couldn't agree more. All right. Continue on this topic of criminal activities. Anamaria, if I may ask one question to you. So we've been seeing in crypto money laundering reports from 2022 that centralized exchanges are basically considered the biggest recipient of illicit cryptocurrency, taking in just like basically half of the funds sent from illicit addresses. So this is mainly due to the fact that illicit cryptocurrency can be easily converted into cash via off-ramp solutions, right? So in your opinion, what's the best way to reduce this number? And what are the main tools that we use, that crypto platforms use basically against financial crime? I think we've discussed some of them, but yeah.
Yeah, I mean, I will start with something that I wanted to finish. Where there is a will, there is a way. So we're talking about innovation, and we're talking about innovation on our side, on the blockchain side, on the centralized exchanges, fintechs, etc. But we're talking about innovation on the fraudster side, on the criminal, the people who are actually stealing money or endeavoring some sort of fraud. There are things that can be put in place, but we need to start at ourselves or the market participants. And I believe it is essential to find a consensus and trust what our former panelists spoke about also. We actually had a case recently where within a couple of hours, we were able to reach out to a big part of the market participants and inform them about the situation, tell them what happened without giving any names, without releasing any customer information. And because of the level of trust, the fact that we as of anti-financial crime professionals have built and have the understanding that we're all fighting towards the same goal, the funds were flagged as stolen funds and as originating from a fraud activity in a number of hours. And I believe that is great success, to quote a meme, because that is not possible in traditional finance. And that is a tool, consensus and trust and transparency and communication at some level are amazing tools at our disposals, and is something that will help us on so many levels, including in conversations with the regulators, including in showing that crypto is actually safer because of data, because of the transparency of the blockchain, because of technology, because of experienced professionals. We are able to not necessarily put a stop to it, because again, if we innovate, criminals will innovate, but at least try to trace it, try to stop it, find ways, innovative,
Easier ways and quicker ways
to catch them where they stand, or who knows, at least stop them and create avenues for identifying them at a later date, which we have seen with the help of reports from blockchain analytics. We have the latest reports and the latest investigations by Binance and Huobi. That is another amazing example of what data can do, what blockchain analytics can do, what professionals can do if they work together.
Yeah, absolutely. And still on this topic, do you think, in your opinion, that certain crypto services, let's name one, for instance, mixing here, do you think that this increases the likelihood of the platform being used for illegal purposes? And if so, do you think that there should be a limitation in order to help crypto platforms to thrive in this market?
There is regulation against it in a number of jurisdictions. We have the US who actually sanctioned code, which is such an interesting conversation for, most probably all my panelists here. But mixing, and I've seen customers in our platform with the help of blockchain analytics that have used mixers in the past throughout the transaction nodes. But those people had no reserve in submitting KYC documentation to us. So it can be used for, again, there's a will, there's a way. They can be used for illicit activities, but they can also be used by normal individuals who just want an added layer of protection or, confidentiality to their assets, the convenience of their assets. So it's a matter of how you look at it. If we take the stance of the US SEC, where crypto is bad, we are going to use all avenues at our disposal to enforce everything and to bring everybody to justice. We can do that, but I'm not sure that regulation by punishment helped anybody. On the other hand, there are more lax jurisdictions which have taken the position where let's see what happens and then we'll regulate. I don't know if that's the good approach. Also, it's a matter of having guidance, having an open conversation with the regulators as well, and obviously finding a consensus, because at the end of the day, all of our goals is to protect the customer and to create and to demonstrate that this is a robust industry where professionals know what they're doing and actually help and collaborate with regulators and enforcement agencies.
That's the main goal in the end, right? Anyone else would like to add on this?
I just wanted to add, I think we also need to educate not just regulators, but everybody. There are differences between privacy by default and privacy enabled coins, right? It's a tougher argument if you're going to make it against Monero. But if you're talking about Zcash and Dash, like a very small percentage of users or clients actually enable all the privacy features. And there are other risk mitigations that you can take that are effective. If you know that a client or a user has exposure to a mixing agent or is using a privacy-enabled coin, there are other triggers you can put in place where you might ask for some additional information. You might ask for a source of funds, source of wealth. You might verify some additional information or conduct EDD. It should not be kind of this blanket conversation of all privacy coins are the same and there are no mitigating factors you can take against any of them.
Anyone else?
I was just going to say, basically reiterate what Amanda said, to have the right controls in place to know your customer and understand why they're using those types of services.
Absolutely. Thank you. All right. Last question then. It's kind of an open question, so please feel free to jump in. So given the FTS skeptics see further proof that crypto is a complete fraud, to the more cautious is proof that crypto needs more regulation. Yet, FTX was positioning itself as a leader in regulation, not just like publicity-wise, but also through developing significant relationships with regulators and investors, right? What's your opinion on this sentiment, like in a positive and negative sentiment?
So I think FTX obviously did a fair bit of damage to the industry and the public's view of crypto as a whole. But I also think it's extremely important to realize they presented themselves as the most compliant, as the most interested in regulation, but they never were, right? That was a facade. SBF has admitted it via a number of texts. You can just go ahead and substitute out crypto for any other financial service or any physical product and put it into the exact same scenario as FTX, and a fraud is a fraud, right? When you're asking individuals to deposit funds into a bank account that is held by a entity that is not actually tied to your entity that's providing the service, no, there's just no world where that would be acceptable anywhere. So, it feels like a lot of people are being painted with a very broad brush, and just because SBF took this very pro-regulation view in public doesn't mean that it was more than a facade and that they actually did anything in that space. So I don't necessarily have a answer to your question other than we need to actively push back on the narrative that it had anything to do with crypto. It had everything to do with,
Not the technology, it's the people involved.
Yeah. I actually want to play devil's advocate a little bit. They did have FTX Japan, which was fully regulated. At some level, don't get me wrong. I don't in any way support or sustain what happened with FTX. And obviously, the initial report is for those of you who haven't read it, please read it. It's an amazing investigative novel. It's a matter of what you actually want to do. And we're talking about kids held up in a penthouse in the Bahamas, playing God with billions of dollars. At some level, they had a little bit, like a crumb of a good intention, because they did set up FTX Japan under the regulation and in accordance with their obligations. Everything else that they did on the side, well, we all know. And it is damaging, and it is damaging on so many levels to the industry as a whole and to us who are working in the industry and who are trying to build something to show that it's not the devil. SPF didn't help. So
I think we need to put crypto market away from FTX and basically move forward, right, as soon as possible.
But it's not only FTX. Have you guys read the new enforcement? It's not an order. It's what it's called. I don't know the legal term on Do Kwon and Terra USD. That's another riveting read for those of you who are curious.
And in your opinion, what would be the best way to approach crypto platforms with regulators, let's say?
Transparent communication.
Yeah. I think there's a lot of a lot of platforms who have very successful conversations with regulators. Maybe not the SEC as of late, right? They're not looking to have a conversation with anybody, it seems. Other than maybe in a courtroom someday, it sounds like, with a number of providers. But but I think a lot of the remaining global regulators have been very open. And again, the regulators, just like crypto, are not a monolith. They are so many differences, which goes to your Japan example too, right? But every touch point you could have with a regulator is worthwhile. You as a crypto, well, unless they're coming after you, that's no, maybe not. But in starting early and discussing with them where they see the risks gives you an opportunity to educate them. Gives you an opportunity to be educated by them as to what their views are. Every time we want to change our registration, add a new product or service, has actually been a deep dive with our regulator and has provided a lot of insightful information to both us and them, and it's only improved the situation. So it's the transparent communication, not just a facade of, let me donate some money to some legislators and we'll see if they ever get that back. But I mean, that's very, very different than regulation and I guess lobbying or whatever SBF was doing. I don't know.
And I think in my experience, they are willing to be educated as well, right? They're open for it. So yeah, in general, I would say.
I mean, I can give you the two sides of the spectrum. I have been involved in one of the successful registration of a VASP in Abu Dhabi, when Abu Dhabi was at the forefront of VASP regulation in 2018. That application process was a continuous communication and a continuous effort for them to understand what we're doing and for them to tell us their expectation. On the other side, I'm talking about, I'm not going to name names, but it's a European regulator which have done nothing but put in barriers and restrictions to every step of the application, regardless of the full transparent manner that we submitted documentation, we reached out for commentary, etc. So it's a matter of how open they are. And I think there's also an element of fear with regulators.
Fear.
Because first of all, they don't understand. And second of all, we're talking about cycles and cycles and decades of traditional finance. And everything is new. And obviously, what you don't know, you don't understand.
Let's keep it away. Exactly. Maybe we can open to the audience?
Yeah, let's have some questions. Anyone wants to ask the panel any questions?
Thanks, guys. My name's Rick. I work for a company called Bitco. We do custody.
We know you. I think all of us do.
Yeah. It's just the usual thing you say with Q&A, right? So, no, my question was going to be, in your experience, who is winning the regulation race or the compliance race? Which jurisdiction? Because everyone seems to be contradicting themselves, or, in the case of Micah, just falling over themselves. So it'd be good to see, in your experience, who is ahead of the pack, as it were.
Some people would say Bermuda. I personally would say France. The UK is actually doing a lot lately with the new proposed regulation. There are other conversations about the new regulation in Dubai under VARA. It's very interesting regulation, very well put together, but people tend to forget one thing that is essential to startups in crypto where we are now, which is money. and how much money, where not everybody's a Binance. I mean, Hong Kong is doing a lot of efforts lately and have opened up the market literally a couple of days ago, if not 2 days ago, to retail investors. So I couldn't tell you for sure, but France is the best one in my view.
Sorry, may I jump in? So within the past, since inception, Bitstamp has over 40 licenses and registrations. We have MTLs across the US and a BIT license in New York. We have a payment institution license in Luxembourg and various VASP registrations in Luxembourg, Netherlands, Spain, Italy, France, and across Europe. I think the heaviest lift is probably France, if I'm being honest. Out of those, France and Germany are tough, but once you're there, there's such reputable jurisdictions with such knowledgeable regulators that I think it pays out, really. I haven't seen Italy reject any applicants yet, as opposed to the UK, which, as we all know, is in the past couple of years been very difficult. I think with 300 applications, they only accepted about 40 to 45, and now they're overhauling the regime. So we'll see what the new regulations and licensing under FISMA look like. But I think generally Europe is kind of ahead of the pack. And if you're willing to go to some of those jurisdictions and set up operations where it's a bit more difficult, that it is worth it in the long run. But it's an investment.
France, for example, with the MiCA, which is kind of
France is actually ahead of MiCA. France is ahead of MiCA.
Of the entire EU, closest to what, and ahead of, frankly, MiCA.
And they have been from the beginning because of
they don't have resources.
France.
Can register. You cannot.
No, they're pushing for the full SAN license now. I have seen PACTA license. There are, if I'm not mistaken, there are quite a few PACTA licenses that have been granted, but you need to remember that the registration for the PACTA license was not mandatory. They only made it mandatory in December. It was the light touch AML registration, which everybody went for. And I believe all regulators have a deficiency of resources. It's a matter of, obviously, your business plan, which is what I've seen has one of the heaviest carries with how you're going to be set up, and then how you conduct yourself and how you carry the communication. Because there are a lot, and what I see, there's a trend of people using former regulators or consultants, local consultants who say, I've done this, I know the people. But that's not the case, because this is a clean slate for everybody, especially for regulators. And I've seen what I've seen in my experience, they want to do this right. So I know FCA have chased away quite a few layers in the industry, but it appears that on some level they want to make it right and they want to understand the industry. And it's the same with the AMF. And while the AMF may not have the resources, not to my knowledge, they have kept an open communication channel for everybody. And that's a big thing. It's always been the conversation with the regulator. In Spain, last year, they made the registration, the AML registration, mandatory. And we're not talking about huge resources with the Bank of Spain. But they pulled through, and I know a specific exchange in Europe, a really big exchange, they got their registration within 5 months. So I think there are a lot of elements to it, and resources right now, because France actually wants to be a big player in the industry, I don't think that will be a problem. That's my personal opinion.
All right, it's one more question.
Thank you. So until the tail end of 2022, we saw the focus on regulation was pretty much around anti-money laundering. And since then, we've got complaints, treating customers fairly, segregation of client assets, transaction monitoring, market abuse.
Conflicts of interest, cybersecurity.
I mean, it's like a tsunami every morning. How are you dealing with teams who are just used to dealing with AML as being the be-all and end-all of compliance, having to scale themselves out into the wider, pretty much fully regulated, full-service financial services institution when all they've ever been told is AML is what counts?
So I think, so from my point of view, it's about time, to be honest, that is the regulation we're starting to see. We talked a bit earlier about how it's the narrative around financial crime being, the only, it being such a big problem with crypto. It is partially being pushed by the regulation, really being just about AML registration, right? Which is all it's been today. And then you're not giving any, no one's going to do more than they have to, and all you have to do right now is AML register. So it's kind of, I mean, I'm glad to see, prudential, consumer protection, all that coming into play, because it's what's necessary and it's what would have prevented an FTX. As to how are we doing with it? Hiring. I don't know, it's not the answer you wanted, but it's true. With the existing teams that are mainly only AML focused, it depends on the personnel and where you get them from, and what, a lot of people do have, if they're coming from the fintech space, have gone through a very similar journey, right? The EMIs went through, obviously heavy prudential regulation at this point in time. So poaching people from that space, it is, to me, seems to be the right direction to go. Whereas if you go for somebody who only has big bang experience, they're probably going to be very narrow into, ideal in credit risk, or ideal with whatever their vertical is. So finding those well-rounded individuals from the fintechs of the world, and we're in the UK and Europe where there's a lot of experience in that. But yeah, hiring.
I have one last question. Oh, okay. All right. I'll give it up.
Thank you. François from Crypto Simple. We are registered in France as a PSAN, as you guys were talking before. I have a question regarding UK. What do you guys think about the situation with the UK, the FCA, and especially the communication that we had from the Prime Minister recently? Where do you think this is going? Do you think like there is a way to go through, especially because it's really interesting to talk about UK since Brexit, because if you go, you can go in France to access the European market, but if you want to access the UK market, you have to deal with the FCA. So I'd love to hear what you think about that.
I think the industry, and I don't mean to speak for everyone, is largely supportive, but let me start with the concerns. The process to get a registration was long and cumbersome, and it seemed that there was a lot of turnover with the regulator during that time. So it extended a process for a lot of firms that were trying to do the right thing. So I think that there's a concern of how the regulator will handle the application and licensing process generally. But I think the substance of what's in there, people are largely supportive. It obviously goes beyond money laundering. There's a lot of provisions in there about segregation of assets, market surveillance, conflicts of interest, risk disclosures, having standardized processes for any assets that's on your exchange. Those are all, I think we can agree, very good things. It's going to be a lot of work, but very good things kind of overall. And I think that we have to see where it goes. I think one of the other things that's interesting about the UK regulation is that it now is going to include crypto lending platforms, which to my knowledge, MiCA doesn't really touch. So now I think for the first time, I think there's something in writing that we can see the UK starting to diverge and wanting to regulate a part of the industry that MiCA has not, for whatever reason, explicitly touched. So we'll see how the UK pulls out with that.
Amazing conversation. I'm just wanted to make and consider this my closing remarks. I'm asking a question. So we talked about fear, right? And the fear of the unknown. I'm kind of very specific. Many times I speak, it's people just don't know what they're dealing with, right? How do you overcome that? And how can you trust regulation, which is a prescription that comes out of those people that have the fear of the unknown, right? How can we as an industry tolerate that? And what can we do about it?
Work through it and demonstrate what we are actually doing. I mean, we have, again, I will bring up the new finance who will be collaboration. We have the breakdown of the Tornado Cash mixing services, which led to the Lazarus Group and blocking of a lot of funds. We have the Bislatos. We have the resources. It's just a matter of having enough time so that regulators see that we're actually doing the right thing and it's not all fraud. Not to mention the fact that regulators have started publishing or defining regulation for CDBCs. What are CDBCs?
Steven, if
Yeah.
effectively a co-host, so
Sorry, I mean, you're at my office. So if you're talking about fear of the crypto industry facing these regulations that are coming, I think maybe us compliance veterans don't have that fear because we've seen this all before. We've seen it all, not with crypto, but we've seen it with other innovative financial services. So it's realizing this is, I mean, there's very little that's new in this cycle. This has happened before. We will iterate as a society on these regulations. We will see regulators that take very hard approaches. We will see regulators that don't turn down a single application. Italy.
what is Italia?
Yeah, sorry. They're not the only ones. So, and they'll have to deal with me at some point anyway. So, but point being, it's, I mean, there's really no option other than to push forward, realizing that regulators are humans as well. They're going to make these mistakes. They're going to go overboard, and others are not going to go far enough. And we're going to work together, hopefully, as a entire industry, not just the firms, but the regulators as well, and find the best solution. There's lobbying. I would push more towards joining an industry group, joining some of these initiatives, these collaborative initiatives, but getting through the door with any regulator, even if it's, a lot of the questions out here about how long is it going to take? Are they under-resourced? Yes, in some cases they are under-resourced. It's a constant complaint from the industry, the entire financial industry, by the way, about the FCA. But getting through the door, getting your face in front of them and starting to have a conversation, that will reduce the fear significantly in most cases. Others, you'll go, okay, never mind, I'm done. This isn't the place to be. But those markets are effectively writing themselves out of the industry, and they'll realize their errors in, I don't know, probably a decade, but that's their loss, unfortunately.
Thank you so much. Thank you, Paula. Thank you, amazing guests. I think push forward and work together is what I kind of gather from this. Trust and transparency, open communication, dialogue, I think data. Yeah, she said it.